Hi guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. So guys, I'm going to give you some gold every day. I'm going to let you know which currency pairs I'm looking to trade and which direction. And I'm also going to let you know which news that you must be aware of. If you like these vids, then please subscribe to the channel and like and share. So let's take a look at the chart and what I'm potentially going to trade today.
Good morning traders, it is Friday, it is the 18th of March. We have made it to the end of the week, well done us. Guys, leave a comment, let me know how your trading week's gone, or if you need help with anything, yeah, leave a comment below the vid. Right, as always, we're going to start with the recap from yesterday. We had 4 potential trades. The first one was this. This is the Aussie dollar against the Canadian dollar. This is the day chart that you're looking at. Okay, and the idea was this, yeah, we had this bullish candle form a couple of days ago, and we were just trying to take, and the market is in an uptrend as well, so we're just trying to take this upward momentum up to this blue line here, and then even this blue line here, guys, okay? And as you can see, that's exactly what happened, guys. But let's look at H1 to see if we could get in on the trade. So guys, yeah, when we approached the market, it was around here, okay? And as you can see, price didn't retrace into our grey zone. Okay, but sometimes, guys, the market has such strong momentum in one direction, it may not always retrace as much as we like. We want to retrace because it represents value. Yeah, it gives us a better price to get in. But if you want to be more aggressive on the trade, you could potentially get into the first bullish candlestick pattern that you see. Okay, so although it didn't retrace to our grey zone, you could have got in on this candle here. Okay, this is a bullish candlestick pattern. It's a bullish engulfing pattern. And sure enough, literally from this candle, price goes all the way up to our blue zone. Okay, so yeah, that would have been an excellent trade. I did actually get in on this candle. Okay, so I entered here. I put my stop somewhere like here, quite a distance away, just in case it did retrace. All right, but then that still gave me an excellent risk to reward. Okay, so this was a successful trade for me because I was aggressive and took the first bullish candlestick pattern. Okay, the next trade was this. This was the New Zealand dollar against the Canadian dollar. Obviously, this was very correlated to the Aussie dollar, Canadian dollar, guys, and it was a similar story. So we had this area of which was once resistance, then it come up and this area became support. Okay, then we had this bullish, not as bullish as I like, but it was bouncing off a good zone, this bullish candle, and all we wanted to do was take price to this blue line and even potentially this blue line. And as you can see, the market hit our first target quite easily. So let's look at H1 to see if we could get in on this trade. So guys, as you can see, it was another similar scenario to the Aussie dollar, Canadian dollar. Yeah, price came up, but it didn't come back into this grey zone. Yeah, it didn't retrace quite enough. But again, we had this candle. Okay, we had this candle and this candle. Okay, both telling us that buyers are in control. Okay, I didn't get in on this trade because I was already in the Aussie dollar, Canadian dollar. Yeah, but you could have got in on this candle or this candle, then sure enough, it goes up to our blue line. Okay, if you were being more aggressive because it didn't retrace to our grey zone. Okay, guys, so yeah, that was the second trade. So it was a good direction, but whether you got in on this trade or not, you know, it depends. But yeah, good direction. Okay, the third trade from yesterday was this. Let me just remove that. So yeah, we were looking to short this market. Yeah, it came up. It didn't break these highs here, and then we had pretty much 2 days of negative candles. So we were just trying to take price back down to this blue line. Okay, let's look at H1 to see what actually happened. So as you can see, guys, we joined the market around here, and then price came up. We had this wick here. Again, if you were being aggressive, you could have traded off that. This candle definitely tells us sellers are in control, or even this candle. Yeah, all of these candles tell me that that is testing that zone and reacting. Okay, but for example, if you got in on this candle here, yeah, your risk to reward isn't good. Yeah, this is the last low, or even if you come down to here. Okay, but this candle, yeah, this is a good candle to enter. Yeah, you can come back down to this low here, close 80% of the trade, and then leave some money still running. Okay, I have been quite aggressive in the markets, and I got in on this wick. Okay, so I entered on the close of this candle. I put my stop above here. I closed 80% of my trade at this low, and I'm still in this trade for 20%. So I'm hoping it goes lower. Judging by the day chart, I think it will. Okay, so this was another potentially good trade idea, guys. I hope you took it. The last one was this. This was the pound against the Aussie dollar. One of my viewers had their eye on this as well. But as you can see, guys, yeah, we wanted price to come up. Well, the reason we took this was because of this candle, guys. Yeah, as you can see, we're in a downtrend here. Okay, this candle led me to believe that sellers were in control, and it was, let me just zoom out, and it was bouncing off of this zone here. So this low here corresponds with this high here. Okay, so that's another reason to get in this trade. And we were just looking to short this trade, yeah, off of this candle, yeah, just down to this blue line. And you could have left some money on the trade potentially down to this line. But as you can see, guys, it hit our first target quite easily. That was helped by the news, though, to be quite honest with you. Okay, guys, so again, we had our grey zone. We joined the market around here when I woke up. And again, price hasn't retraced into this grey zone. But again, if you want to be aggressive in the markets, because sometimes you don't always get the retrace you want, we could trade this candle here. Yeah, this tells me that sellers are in control. It's a bearish engulfing pattern. And sure enough, from this candle, it quite easily hits our first target and could even leave some money on the trade to go lower. Okay, so that would have been a good trade as well, guys. This candle was news related. You remember the interest rate decision coming out of the UK? So yeah, it was to do with the voters. Okay, that one less person wanted to hike the rates. Okay, hence weakness in the pound. Okay, guys. All right. So yeah, that's the recap of yesterday's trades, guys. Let's take a look at today's trades. Guys, if you enjoyed yesterday's recap, then please smash that like button. Yeah, it really helps support the channel. It would be greatly appreciated. And why not subscribe? So the trade ideas for today, Friday the 18th of March, we've got 3 potential trades. The first one is this. This is New Zealand dollar against the Canadian dollar. So we're still looking to long this, guys. Okay, let me remove the first target because we've already hit that from yesterday. Okay, but yeah, bouncing off this area of support here, the last 2 days have been, yeah, bullish candles. Not as bullish as I would like because of these wicks, but just because of the market structure, yeah, higher highs, higher lows, bouncing off the moving average 20, I still think we can take price back up to this high here. Okay, so that's the trade idea, to long this market for those reasons. Let's look at H1 for execution. So we've got to be careful here, because if market structure continues in this vein, we've got lower lows, yeah? So we need to be aware of market structure. But yeah, if these lows hold, then yeah, I'm happy to take that longer. Okay, so what we want to see is price come down into this grey zone here, guys. Then we want to see a bullish candlestick pattern form. Okay, we're going to take price firstly back up to this high, where we will close 80% of the trade. Remember, the H1 high or low is always our first target. We close 80% and then we leave 20% to run up to our higher time frame target. Okay, so New Zealand Canadian dollar long. The next trade we're looking at is this. This is the euro against the New Zealand dollar. As you can see, it's in a huge downtrend, guys. All right, and for the last, and again, yeah, this high here held, and for the last 3 days we've had these bullish candles. So it just tells me you can just come down a little bit further back down to these lows here. Okay, so we're looking to short this market. Let's look at H1 for execution. So a messy chart, guys. Yeah, this was all the, look at all this chop, and then it eventually broke. Okay, so that leaves us with a messy chart, but it could retrace literally only up to this grey zone, and then we want to see a bullish candlestick pattern, sorry, a bearish candlestick pattern form, and then we can take price, just keep 100% of the trade down to our blue higher time frame target, because this from here to here will not give you a risk to reward of 1:1. Okay, but if price retraces up to here, yeah, we want to see again a bearish candlestick pattern, but we could take price back down to here as our first target and then leave 20% on the trade to run down to the higher time frame target. Okay, so Euro New Zealand short. The third trade idea is this. We're looking to short this market, the euro against the Aussie dollar. This is the day chart. For the last 2 days, we've had these very bearish candles form. Yeah, they have very little wicks. They're just solid, sellers are in control. And all we're going to do is carry on a little bit further down to these lows. Okay, so down to this blue line. It doesn't look like much on the chart, guys, but you know, that's potentially 60, 70 pips, guys. Okay, all right, so yeah, let's look at H1 for execution. All right, guys, so yeah, what we want to see is price retrace up into this grey zone. We want to see a bearish candlestick pattern form, and then first of all we can take price back down to this low, close 80% of the trade and leave 20% to run down to our higher time frame target. Okay, guys, so yeah, they're the 3 trade ideas for today. Let's take a look at the crazy world of news. Before I start the news, guys, if you're enjoying this daily morning analysis and would like to receive it every single morning, then please subscribe to the channel and smash that notification button, guys. That way you'll receive it every single morning. Also smash the like button to help support the channel. Right, the news for today. So overnight, we've had some important information coming out of the Bank of Japan. So the interest rate decision was as expected. All right, but this is also quite important, guys. At 6:30 GMT, you'll have the BOJ press conference, and they'll obviously discuss the interest rate. So this could move the yen about quite a bit. Okay, so keep an eye out for that at 6:30 GMT. The next piece of news we're interested in is this at 12:30, coming out of Canada. We've got core retail sales, so that could move any Canadian dollar pair. After that, at 2 o'clock GMT, we've got coming out of the US, we've got existing home sales. Again, another 3-star rating, so it could potentially move any US dollar pair. Other than that, guys, as you can see, there's no real news to speak of. All right, guys, so yeah, I hope you've enjoyed the vid. If you have, please subscribe, like and share. I hope you have a wonderful trading day and a marvelous weekend, and I'll catch up with you on Monday. See you later.